Welcome back, everybody, to another episode of Multifamily Investing 101. I'm your host, Travis Watts, the Director of Investor Education here at Ashcroft Capital. In today's episode, what we're talking about are the different business plans that you can leverage when it comes to investing in commercial multifamily real estate. I want to discuss with you the different business plans, but also the risk and the rewards of each. Disclaimers, as always, never financial advice. This is for educational and informational purposes only. So please always seek licensed financial advice when it comes to your own investing. Now let's go ahead and just get started and kick it off by talking about the first of the business plans you can choose from, which is a core asset. These are going to be brand new built or very newly built product. They're going to be in prime locations. They're going to have all the bells and whistles. They're going to be the nicest properties on the market, usually with the highest rents in place. And the tenant base is going to be very stable and very long-term. So this is why the risk profile is so low. The focus here is on stable income and preservation of capital, with the returns being modest but yet reliable. The next asset type or business model is called Core Plus, and the risk profile with Core Plus is still very conservative to low, but it does entail a little bit more risk. Now, these properties are also well located in prime locations, just like with a core asset. However, they're usually a bit older and they may require some strategic repositioning. That might mean changes to management or changes to the overall property to help boost the overall income and revenue. So while the risk is slightly higher than a core asset, the aim here is still on conservative, stable passive income and preservation of capital and modest growth potential. The next asset type or business model is value add, and it's what we do here at Ashcroft Capital. The risk profile is deemed to be moderate. It's pretty much middle of the road. These are well-located properties, but generally speaking, they are older and they require more capital influx, more renovations, more repositioning. And that is why the risk profile is set to moderate, which is higher than both core and core plus, because there is the risk of being able to manage and stay on budget with this business plan. The perk is that with higher risk comes higher return potential. So the returns are often higher overall compared to core or core plus. The next business model is opportunistic, and the risk profile here is set to high. Now, these are often older properties that are going to require extensive rehabilitation and renovations. They may need rezoning, they may need some redevelopment, and there may be speculative elements to these business plans. So as an investor, you'd have to be willing to take on a higher risk profile for potentially a much higher return, but you do have to expect that there may be hurdles, setbacks, and things that can throw the business plan off track. And the last business model or asset type is new development. The risk profile here is set to very high. In fact, it's the riskiest of all business models because we're talking about ground up development. There will likely be challenges with zoning, with workers, with staying on budget, with trying to forecast future pricing and future rents. And there's a lot that goes into the process. And all the while, it's not uncommon for these business types to offer no cash flow to the investors until the property is completed, rented out, stabilized, and then at that point, cash flowing. So while there is potential for higher profit, there are also significant risks to consider. Given the longer time frame, a lot can happen several years down the road, from economic conditions changing, recessions, and of course what we've seen in the last couple of years, which is rising interest rates, which hurts the valuations of these properties. So with these 5 business plans in mind, I hope there was some value in this short episode. If you ever want to take a deeper dive, you can reach me at travis@ashcroftcapital.com. And to learn more about our current offerings and opportunities in the value add space, you can visit ashcroftcapital.com for more information. Till the next episode, Truly appreciate you being here. Have a great week, everybody.